talk about that?
So we can start with, I'll start with some positions I have. Are you seeing this okay, Richard?
Yep. Trading views up.
All right. We'll start with a position or two. I don't have a lot on right now because, the last few days the market hasn't really been acting
Great.
so
Yeah.
well. So this is Revolve. I have a position in this currently, but I can show. So looking at a weekly, I'll go to a weekly first. You can kind of see here. I'm sorry, this is my normal. This stock has had a really big run, and then going all the way over here. This is sort of your primary
Base.
really
Yep.
primary base here. It kind of came out in the low 20s last year, and then just had a long, pretty nice run, and then put in, this multi-month base. And if you look, the accumulation was pretty good. And so on the daily, I'll look at the weekly, but I trade off the daily. This is that base on a daily. You had this break in here, but it was met with some accumulation right here. A little bit erratic in this base, but then it started to kind of tighten up. And it first kind of came on my radar over here. And so I was kind of looking at this level as this is ultimately where the supply needs to. There's some supply at this level. It's broken here. Use the Mark's term VCP, volatility contraction. We had a contraction here, then you had another one right here. I would have preferred it to line up into this level, but it didn't. So I took a partial position on this day coming out, and then it ran right up to these highs and poked its head out here. I bought a little bit more, almost got stopped out on the ad. So like if I'm going to pyramid up a position, I'm always going to be adding at the same price or higher, but only when I think the price action is improving.
Right.
So this was acting well. I bumped the position, and then it put in a reversal, closed pretty good here though, and then right back into high ground. And this is sort of something where, let's say you get a stock, it breaks out and pulls back into the range. If I'm being really aggressive, I might just trim it. And in this case, if I doubled up my position to a large size, I'd probably reduce that add-on at that point. I wasn't quite that aggressive. Plus this one, it was a little wider, meaning like this range here to here was about 7-8%, where that would be normal. I don't want that knocking me out. Right. But the best situation should come back quickly. It did, back in a new high ground. I sold a portion of this last week at around 20%, which is usually about 4 times my normal gain. Took about half the position off. Now I'm sitting, move my stop up, and I'm at break even. But if we come down here much more, I'm going to look to move it up even more, or potentially use that in the 50-day trail. I like the space. I like the fundamentals. And this is sort of in that consumer retail group, which is a group I like to trade. From what I understand too, their online stores are very popular. Sort of a lot of positives in terms of the sentiment there. And the earnings and sales are pretty good. So that's one. Another one.
Can I ask you some questions?
Absolutely. Ask me.
Sure. So I think you might have misspoke just a little bit. You said 20% is kind of 4 times your average gain. Is that your average loss that you're referring to? Around a 5% average loss and then 20%?
Yeah, I'm thinking. Sorry, yeah, So if I'm selling something, in the case of an average loss, it's a little less than that actually. Yeah. But if I'm around 20%, that's a 4 or 5 times my average loss. Sorry. Yes.
Yeah. Perfect.
Yeah. I'm generally, 7-8%. I try not to let anything run more than say 10. But 7-8% is usually kind of that's a pretty hard line in the sand. And ideally, I'm not even going to carry the whole position to that point. I might carry part of the position. But if I get the timing wrong, I'm starting to scale back sometimes 2, 3, 4%.
Right. And I want to hear a little bit more details about your stop loss levels initially when you first buy the position, and also as the stock makes progress, at what point do you move that up to break even? What point are you really deciding to sell a partial and then maybe move that stop even more under the swing low of the natural reaction? So I'd love to hear a little bit more about that.
Well, that'll lead me to the next example, but I can share it with this one as well. So, and this is where, like I said here, I bought a small position as the stock is coming through, sort of this pivot point here around $70. Now, I was expecting the stock to potentially run into some overhead because you had this level, as I drew before, which we hadn't got to, and then this other sort of reversal up here around 75. Now, we don't know what's going to happen. So I'd much rather have a small position on in case, because sometimes stocks just go blasting right through, previous supply levels or, resistance levels. In this case, it didn't. It came up kind of like I thought. Now my initial stop is going to be right down in here. So again, it's a little wider. I'm buying at 70, stopping out at 64. That's 7-8%. Now, if it acts really poorly and I get a bad close, I might just cut a portion. In this case, stock comes up and it didn't really tighten up a lot, but it lined up, sort of with this other level. Yeah. And so I said to myself, all right, I'll bump the position if it can come out, and then use sort of these 2 lows as my stop for the bump. I wasn't going to cut the whole position there, so bump the position. I have a stop level here for that, and holding the original stop. My average price is, now between probably 72, 72.50, and my average stop is going to be around 67.50. Sort of similar, but I'm adding as the position is working. Where if you do that consistently, eventually you're going to put yourself in a really good situation. But I would not. You could be more aggressive, and in some cases I would move my entire stop right up here. to say,
Mhm.
and this is the only reason I didn't is this stock wasn't super tight. And in general, the market has been a little bit um, a little bit wider and looser in some of these growth areas. So you got to make a decision. But certainly, normally, it is a fine tactic in my view. So let's say you bought coming through here at 70, and then and you took this much risk. Well, now I can double the position up here and move my original shares to this level is almost break even. So I'm effectively doubling my position while taking the same risk. Follow me
Right.
there?
Yeah.
This is a key point. This is really how I pyramid my entire portfolio at times. And then once to your question, when do I move? When do I move stops up? Once this thing follows through, then I'm definitely moving my stop up to this level. Does that make sense?
Yeah.
And then once I'm at a multiple of my risk. So say I'm at 10% or something like that. If my average loss is 5, I'm then thinking of protecting break even usually. We're
Mhm.
certainly not going to take a full loss.
Mhm.
And once I start taking profits, so I think I sold on this day here. I'm thinking I'm moving the stop to break even or better at that point, and sort of protecting the entire trade to say I'm not letting this dig back into my pocket. And in this case, I would also switch over to the 50-day as well
Yeah.
to say, look, this is now at about my average purchase price. So I'm going to do break even 50-day break even or better. You know what I'm saying? And that's how I'm handling this one in particular. And we're going into a market pullback here, at least
Yeah.
as far as the last few days. And this is how there have been plenty of times where I will sell a portion of a position. The market, if it tends to coincide with the market pullback, but it's a really strong name, it never comes back. So the ones that act the best, I try and give some room, but it's only because they're working, and I've already de-risked this trade, if that makes sense.
Right. Yeah, no, that's awesome. And I also want to ask you about how you use kind of multiple time frames to make sure the trends with you. We went from the weekly chart to the daily here. And I also want to ask you whether on the day of execution, you're using something like an hourly, a 65-minute, even lower than a daily chart to execute.
Yeah, so when I screen, I'm always looking at weekly and daily, and that weekly I'm looking at the longer term trend. It needs to be a longer term uptrend, and then volume. I'd like to see ideally a larger that institutional volume, behind the stock. As far as the intraday, I don't trade on it. I have it up here and there, but it's not something like I don't trade on the
Yeah.
intraday. I don't even look at a 60 minutes. Um, I'll look at like sometimes if a stock gaps and then pulls back to a breakout where I wanted to buy it, I'll look at the intraday as it turns up and then occasionally buy it. But again, I don't trade off it. As far as you know, moving to another example,
Mhm.
like so here's an example of this is actually kind of a proxy for like the overall. This is uranium. I rarely trade the ETFs, but this has been in a long term sort of uptrend. If you look at this on a weekly or a daily, and then it had just this explosive. This is a good example of a trade I de-risk that didn't work as well. It has this really sharp run, and puts in this cup and handle right here. And when this caught support right here and then kind of went tight for a day or two, my antenna went up to say,
Mhm.
okay, I am I am looking to get involved big in the direction. I happen to know a decent amount about the fundamentals in this area as well. So I thought, okay, we're gonna have some fundamental support here, or at least potential buyers. So I was basically setting an alarm right here and a stop right here. So this is like $2-3 on a $90 issue, pretty tight, and I went in fairly large, right as it was coming out. And here is where I'm looking to finance. This was a trade either way, but I sold a portion, so if I'm only taking $3 stop, once I'm at $6-7, I'm at a multiple of my risk.
Mhm.
Peel off half the trade, move the stop up to break even, and try and play it for a bigger move. Didn't work out in terms of the bigger move, but so then as it pulled back in, I got stopped at even. But this is exactly how I like to go overweight at times when I feel like the timing is really tight. Where most people, even if they bought this right here, would probably give it this low. And I would have done that if I was taking a smaller position. Or so the way I would handle it sometimes is let's say my normal position is 20%. If I'm going to go overweight, which would be 30 or twice, maybe double what your normal position would be, I'm going to be really tight on a portion of that.
Mhm.
But I am not, and this is where trading size timing is everything because everyone thinks, well, you just put on more size, I guess you make more money. It's like, well, yeah, but then you're also gonna lose more money too.
Right.
So I want to be big when I think I really have nailed the timing. And again, if the market didn't do what I thought it was going to do, I was out. In fact, I took so big of a position on this day, I used the low of the day as it followed through.
Yeah.
So now we're talking, 91 down to 90, down to 90. I was taking a $1 stop on a portion of the position, and then this low on a portion of the position, and then this low. And so 2/3 of it, if it goes up $4 or $5, I'm in a multiple on that piece. Now that finances the whole trade,
Right.
and that's how. Um, I will take this trade 1,000 times out of 1,000. The fact that it came back, oh, why didn't you sell it all at 100? Well, because I thought there was a chance it's going to 110 or 120.
Right.
I wanted to be there, paid for my normal, full size position with an overweight to allow me to do that. Does that make sense?
Yeah, 100%. I think that's a big key for everybody watching this. Listen to how Mark's kind of talking about financing the risk, taking big positions, managing his risk, so that often he has a large position size, but his normal risk that he's allowing himself to take is pretty normal, honestly. So it's increasing the position size, but not increasing the overall risk exposure, I guess is how I would describe it.
Yeah, and then
Yeah.
last, or I mean, you want to go over a few more examples? I can go over sort of example from last year where sort of the stars all aligned in terms of fundamentals and technicals.
Yeah, let's do it.
This is a
And
lower.
before we go into this one too in depth, Mark, I'd love to ask you. There's a little bit of the art in the chart, but I'd love to hear how you would explain how you identify those pivotal points where you want to take up the position, the pivot points. So with a uranium example, you're using that inside day high, but on another one you might want a more well-defined pivot point, I guess is.
Sure. Well, yeah, we can go over that real quick here too. So the uranium example is a little bit of that's a little bit of art and science. So
Right.
in our work I'm running, and this is what I'm seeing in real time. So remember, I'm doing this in real time.
Yeah.
The the high relative strength screens were showing a number of uranium stocks. The problem was for me, a lot of them were low priced, $3, $5, $10. And Cameco, ticker CCJ, was kind of the only individual stock, and it was also in high relative strength. It's been on and off all year.
Mhm.
So this, I just happened to see this ETF, this because I don't normally screen for ETFs. Sort of coincidentally setting up as some of the smaller names were setting up. So for liquidity reasons, I liked this. And to my point earlier about like when I see a theme within the screens,
Yeah.
that sometimes leads me to the idea, taken together with fundamentals. Well, here we go. You got an ETF which is pretty liquid that almost doubles and pulls back about 20, 25-ish%, right? This is a classic cup and handle.
Mhm.
And if you look, these volume bars, they look a little scary in terms of selling. They close mid-range, but then if you look at the right side, you had strong volume coming right back up. And then all this pullback, the volume was below average.
Right.
And so, to your point, we caught support right here and then went inside for 2 days. Here's your drift back, your little handle, and no real scary institutional selling. So to me, it's just one of these, okay, if it should turn up here.
Right.
To thinking about it in terms of knowing what you need to see. And this is just some of it's a function of repetition, but it's like I saw this and I was like, all right, it should be game on from here. And if this is truly under accumulation, well, then you look at the first day, you get that volume coming right out, which moves moves it right back up. And this is actually another. I love trades like this too, where sometimes you can find this pivot point and position yourself where you can take profits before a stock hits new highs, where you're still at a multiple. So if I was really tight here, I'm at a 2-to-1 before it even breaks out.
Right.
I love that. Then I can peel a piece off, and this is actually what I did. I was hoping it might even tighten up more right in here. It didn't. It just it drifted for 2 days and then came out. If it had drifted and tightened even again, then I would have loaded right back up.
Yeah.
And that sort of leads me to my next idea. Is so this is one where everything lined up for me in terms of technicals and fundamentals. This is Cresco Labs, which is like a U.S. multi-state stock from last year, where I happen to know a decent amount about the space, and these guys were in Illinois, I live in Illinois, and they owned all the licenses. So I read some some work on them, and some people who basically said, hey, the way Illinois did legalization is not like a lot of the other states, and they only granted so many licenses. So those who own the licenses have all the pricing power, and that was sort of really it was like, okay, earnings power, earnings and margins and sales are going to go up big time on these guys. Well, they were in this long-term downtrend, and so I'm just looking for a low risk entry point. Where can I look to get involved? And actually, this was pretty creative. Sort of the first low risk spot. It was the 50 had turned up. It had come off. I nibbled a little bit here, and then just kind of waited. But this then came down, and I mean, I basically traded around this position all last year and held the core of the position. So as it ran up, it came back, set up what Mark Minervini would call a low cheat.
Yeah.
I bought some right here. I didn't sell any into this move, and this was sort of like this was putting it all together. So you had a cup handle. I bought some coming out of this handle and added even more. I went overweight coming out of here. And if you looked, this stock coming out had, this chart, you don't see it quite as well, but it had, moved up. It was like 11 to 15 days on an increase of volume, everything to say, okay, I'm holding a portion of this for a bigger move. I did take some off in here because I was overweight. It tightened up. I bought some back, sold it into this move. And then when it went parabolic, I sold it down. Now it has the biggest extension from the 50 in the entire move. And the stock is almost tripled from when I was first buying it. Now I'm using a 50-day trail on that remaining piece. Close below the 50 over here, and we're out. What I was going to say though, around this time in terms of the cup and handle, these guys had a store that opened up near one of the big shopping malls near where I live. Full disclosure, I've never touched this stuff. I don't have any interest in, I'm a libertarian. It's like, if you want to go do that, that's fine. But I'm, not interested in getting high or anything like that myself. But I was just sort of curious, what kind of foot traffic or, is this something that really is taking off? And it was right in here.
Yeah.
Cold night in Chicago. I was dinner with my wife, and I go, I want to go at least see where the store is. It's on the outside of the mall, and just go pop my head in there, and the line was so long, it was out the door into the freezing cold. And my wife was like, "We're not getting in that line," and I couldn't believe it. I mean, it was like 8 o'clock on a Friday night or something. I mean, just out, just like you thought people waiting for concert tickets or something.
Yeah.
And so large demand is basically what I'm saying. The thesis, it was what I was seeing in the chart was being borne out in terms of earnings and sales in real time, telling me that okay, everything is kind of lining up here. Doesn't happen very often, but when it does, I'm going to be even more aggressive. And so that just it adds conviction. I would never trade on that alone just because I go to the mall and there's people, out the door in a store. Doesn't, but if I see that stock setting up and it's in a group I understand, or it's a retail fad, or however you want to think about it, those are powerful, powerful situations. So yeah, needless to say, it worked out well. But I would encourage people that sometimes you have to go through enough reps to know what it is that you want to see. And then when you see it, there's just that intuitive sense of I've seen this before. And it gives you the courage to either take on a little more size or in my case to stick with something. Look, if you've got a big position, you're going to have to hold through some pullbacks. But again, from this breakout here and then this cup and handle, you didn't have any, it didn't really take out the 50 till you almost had a double. Right. So yeah, that's how I played that one.
So this was the market. I was seeing this sort of weak move up, or sorry, yeah, this move up in price, the weakness in the RSI, and this is the U.S. real estate ETF, and you can just sort of see where I was looking at it. It had this big move down in 2022, like this, right? Actually, it had 1, 2, 3 big moves down, and then the recovery, it just wasn't recovering, and that's sort of telling me that it's still in a macro downtrend. And I think in generally speaking, when you have sharp moves down and weak recoveries, it's pretty much anticipating another sharp move down and a weaker recovery. And it's the same, with stocks in an uptrend. You've got typically the way stocks move is that they have a big move up and then they sort of rest, sort of down at like a slow angle like that, and then they jump up again and they rest sort of at an angle. But so this was, it came down pretty hard and it was sort of coming in at this. You could call it almost like a macro wedge. And so I sort of made up my mind that this is something that I wanted to short, and I was just trying to get the entry right. And so it was building this sort of
shelf,
sort of platform right here. You can actually see it broke out, so it's got this little base, which typically when you see a base you want to be buying, but the macro look seemed like a short to me. So I'm looking for an entry on the sell side, and then this happened, which I think is extremely bearish. And when you have a platform or some kind of base that breaks out to the upside and then reverses, that's telling me that the direction is changing. And then you can also see from the big volume, right, that this is just sort of changing direction. It also enveloped the trading of the last 10 or so days. So it made all-time highs and then reversed. And so I actually got it. Sort of right at this neck. But I wasn't trading this. I wasn't trading this ETF. I was trading the leveraged version. And so this is it basically flipped upside down. And so you can see IYR is the U.S. real estate ETF. This was the platform that it was supposed to break and continue lower. It didn't do that. It reversed right here. And so I got it at this neck. And the way I play something like this is my position size is dependent on the chart. I let the chart and the stock determine how much risk I'm going to take. And so what I mean by that is if I'm buying right here, I basically figure out where I'm going to be selling it. And so I bought this ETF at like 42.50, sort of as it broke to the upside here. This is just a really great undercut example. And I decided that I would sell if it came down to these body lows right here around 3%. And so that, because my rule is I'm only looking to lose 1% of my account, the 3% loss means that I can take a 30% position. And so does that make sense?
Yep.
Yeah. So I enter right here with a 30% position, still only looking to lose 1% of my account. And so that's how I started the position. And I just held this thing because I thought the market. I saw the market selling off at this point, and this was after the weak RSI. And I just sort of held it. And you can even see. I just have to point this out. At this low, I got it sort of at the bottom here, but the RSI was weakening, right? You could see lower. The price was going lower, and the RSI was strengthening.
Right.
So you even see it there on this entry that even though the price is weakening, the RSI is strengthening. That's just telling me that it's possibly changing direction. But anyway, so my biggest drawdown, I kept holding this thing, and I added to it here, and I added to it here. So I had like a 30% position here, and then I added like another 10% here, so I had a 40% position, and then I added to it on this breakout, and so I had like a 50 or 60% position at this point, and the thing kept going. And my biggest drawdown for the year, I mean, look at this thing, it was a monster. My biggest drawdown was this.
Oof, that's sharp.
So I mean, I had like more than half of my account in this thing, and it dropped 17% over the course of a few days, and I was I hadn't sold at the top. I was sort of I kept holding it here, and I was kicking myself because you can see that you can see here there was an RSI divergence telling me to sell, and I didn't sell. The price had moved higher, and the RSI was weaker, and so I just didn't notice it. I was so excited about this ETF collapsing and this thing going up big, and so I missed selling it up here, and I just kept holding it, and I was about to sell it, and this day sort of redeemed me. This sort of undercut and rally, which is very good for the upside in my opinion. And the reason I didn't sell it, it was still above this really good sort of platform that it had built earlier, and so I got this move up with my with my entire position, and then I ended up selling the whole thing on this day. And it's because if you look at the RSI here, big divergence with the price, and the RSI was weakening, right? And you can also see it had sort of 3 clean moves up. It's 1 from the bottom, 2, and then sort of 3 moves, weakening RSI, big volume. That's the biggest volume it had traded up to that point. And so I mean, those are all things that were telling me to get out. But I mean, that was a really big gain for me. In total, I mean, this thing was a 50-something% gain, and I had the majority of my account in it this entire time. So that's a great example of something I held for a while, and was able to get a good gain out of.
Yeah, I've got a few questions, Sean.
Yeah, go ahead.
First on adding to your positions, can you kind of talk through the process that you do to decide when you want to add more capital to a trade that's working, and also kind of how much you decide to add your account, because it makes a lot of sense. Your initial risk, you don't want to risk more than 1% of your total portfolio, but how do you decide how much to add on? Do you kind of treat it as a completely other position, or what's kind of your thinking behind that?
So I don't I have this opinion that as a stock is advancing, the higher it gets out of your first buy, the riskier it is. So right. I'm not on these 2 areas I added to them because they had sufficient time going sideways. They had sufficient time resting before they shot up higher. So that dictated my my opinion to add. But when I'm adding, it has to be significantly less money than what I initially started with. So if I put in 30% of my account on the initial buy, I'm really only gonna put in another 10 or 5%. I might add 10% on that first ad, and then I might add another 5 on the second ad or something like that. But I'm typically not putting like another 30% in after that initial buy, if that makes sense.
Yeah, perfect sense.
Also,
and then
go ahead. Just a general sort of this is just a general like market thing. Have you heard people say that like you can never sell like the exact or you can never buy the exact bottom and sell the exact top? This was actually pretty close to doing that. But in general, I'm really looking for this middle section. Like I think I was way too early on this, and it was just sort of this opportune reversal that I picked up here. And I'll show you more examples where this is more typical, where I sort of get in after the first big move up, and then I get it on this sort of like cup area. But typically, I don't stay in for 3 moves like this. I'm actually only getting this first middle section, and then I'm running. So I can show you more examples with that. But when it comes to adding to positions, I think the farther it gets out of that first buy point, the riskier it gets.
Yeah, perfect. I've got more questions, but we can definitely run through some other examples and just keep them in mind, because I want to dive into kind of your typical sell rules, because you've talked about the RSI, and that's perfect, but I was wondering if there's other rules that you go by, whether you draw a trend line going up the bottom side or use any moving averages in your decision. But feel free if you got another example to go through there.
Yeah, I think those are the best ways to sort of show how I do things. But
for sure,
this was PLTR was one that I got really early. But yeah, I can show you how I got in and got out. But this. Let's see. I had noticed this one.
After earnings gap. Yeah.
Yeah. It was really just the chart that attracted me. It had this big sort of move down. It's this depressed stock, and then somewhere down in here it starts to hold, right? It's just sort of going sideways, and then it has this shakeout where people who had been buying or holding in here finally gave up. They're no longer in this thing, and then right after the shakeout, it's got this big spike of buying. It doesn't quite double, but it has a 60% move, and the volume starts picking up, right? And then it sort of comes back down, but then it comes back up on super high volume, and then it holds this price around 9 or 10. but so that's sort of how I saw it. These volume spikes, this sort of price level attracted me, and I just sort of started watching it. And before I enter a position, I usually just draw a line sort of across the top, and this is sort of my pivot point. Like if it can break above that, especially with volume like this and the price movement before, you're gonna have a big reaction. And so let's see here. It had a really big move up, and I actually got this really early as well. I didn't wait till it got up here. I actually bought this at the high of this last day, and the reason I did is because if you can see these sort of 3 or 4 days on a smaller like intraday chart, it was doing sort of like a reverse head shoulders. It kind of looked like this little section right here. It kind of had this look, and so I was buying on this day right as it was crossing this sort of area. And what's really great about this setup is that I now have a really tight stop. My stop is now at the low of this previous day, which would almost be like, I buy it here and you got the low sort of like right in here, this sort of thing. And so again, this one I was able to enter at, like a 30% position, 25-30% position, and it hadn't even broken out at that point. But this was, a really big day, and then it just continued. Big volume. I mean, when I saw this, I was so excited when I saw this. This is like the best reaction you could hope for. Like in 2 days, you're up 20% on that position. But in regards to selling, I wait for reversal days, and that manifested itself here. This, you can see it stands out like a sore thumb. It opened at 15, it traded all the way up to 17, and then it reversed and finished at absolute lows for the day. And if you look at the volume as well, the volume was some of the highest it ever traded. And I also just thought look at that, a 53% gain in, it was like two weeks or something like that. And so at a certain point, you have to decide, what's your like risk to reward here. To make 50% in a couple weeks off of, a 30% position, you can't really ask for better than that. And I think, not to belabor the whole like RSI thing, but there was a slight RSI divergence here as well. RSI was sideways and the price increased. So it's just showing weakness. And, I didn't get the all-time high on that one. It actually continued without me. But, like in these competitions or when you're trading, you can't really think about, what if I kept holding? Sometimes
it's on to the next one,
Yeah, sometimes that gain is good enough. You just gotta go to the next one. And so, but yeah, like when it comes to selling, reversal days, big volume, 3 moves up is something I look for, and the RSI divergence. You can actually see 3 moves here on like in a macro sense. Look at this: first move, second move, third move. I don't know, 1, 2, 3. But yeah, I think something that's worth mentioning is just the time value of money. And a lot of these sort of longer term moves, they take a long time to develop. And if you're sitting in Palantir for 2 months, that's a whole month and a half, or that's a whole month where you could be using that money somewhere else, where it's not really growing as rapidly as the first move. So
yeah, you've got the RSI divergence there with those 2 most recent tops too.
Yeah, what sort of like these longer term ones?
Yeah.
So you're seeing it too, like here,
Yep.
it's everywhere. Like you can literally see it. Even in Bitcoin, it sort of you got this high, it keeps going higher, but the RSI is weakening, right? You sort of see like the RSI is going down, and then you have a big correction, or the price is moving higher, the RSI is sideways, and so I think it's something really important to watch.
Yeah, and I had a question, and you can use it on your next trade or maybe on PLTR.
Yeah.
Do you move up your stop loss at all? Like at what point do you protect your break even? And
yes.
Yeah.
You know what? Let me show you a loser or one that I traded that didn't work out. same setup. Yeah, you got this long-term downtrend, sort of starts to go sideways, right? And then it has this big price move, and that really gets my attention. You see the volume. This is telling me, okay, like this thing is getting accumulated by someone, and then it sort of regains that initial price it had. And so I start setting, I draw a line across the top and I set alerts so I can track it. And then so this thing starts trading pretty similar to like a Palantir type thing. I buy this one right as it's crossing this line, and I sort of have like the stop around the high of this previous day. So 5%. I had like a 20% position, right? Because once again, I'm only willing to lose 1% of my account. So 20% of my account is in this. I'm willing to lose 5% on the position. That makes 1% in the account. But so as this trades, when it breaks out, I move my stop up to break even. That's sort of the goal right there. So my stop is initially down here, right? 5% from the pivot. And then when it breaks out, maybe after the first day or the second day, I'll move the stop up to, where I previously bought it. Because at that point, it's a risk-free trade, It doesn't matter what the stock does. I don't lose money, and that's the most important thing to me. Now, if it sort of had this new price area and went higher, started like a second move up, I would then move my stop to either the low of this base, right? Or I would bring the stop up to the low of the high, right? So I want to bank some of my my gains, right? But in this case, look at that. I mean, this was
That's vicious.
and this happens. This happens all the time,
Yep.
which is why which is why you need to trade with a stop loss. But in this example, because it had already moved up, I had brought my stop up to break even, and it sucks. I mean, I initially had like a 20 or 30% gain on this position, and I ended up getting out, just sort of like break even there. But that's sort of how I would handle it. An example here, I got to show you like another failed example where it actually continued and I was able to get out with a few percent profit. And you can sort of tell like the shape of stocks that I like, hopefully from these examples, but I like sort of a downtrend, starts going sideways and then shoots up and does sort of like this like cup and handle base area.
Yep.
And it's kind of interesting because, you can slam the methodology is you buy high and sell higher. And I do sort of have elements of that in that I'm buying these local highs, right? But they're not like all-time highs. If I would have to wait until $40 to buy this stock at all-time highs. But so I'm buying this thing sort of in like a local high, if you want to call it that. But yeah, so it trades down, sort of starts going sideways. Look, it has like an undercut, shakes people out, and then has got like a big sort of buying move up, builds this little base, and right around here I was like, okay, this is a good little opportunity. It sort of got the momentum. Sort of draw a line, set an alert. I'm gonna want to buy it when it comes out here. And I'm trying to remember, I think I did. Yeah, I bought it here on this high, and set my stop around $3. This one was also like a 25-30% position. It doesn't always work out that way, but in just these examples, I guess they're all 30% positions. But it starts going, and you can see this is the first move up. After the first move up, I move the stop up to break even. But then it builds this tiny little base and moves up from there. In this example, I'm actually moving my stop up now to the bottom of this base.
Yep.
Right, because it's established a new pivot point. So this was the first pivot point, moved up from there. It's established a new pivot point right here, and actually, I think I added here. So initial buy 30%, came up here. I added another 10% or 5% here, but my stop is higher at this point, if that makes any sense. And then look at this. This thing just absolutely crushed me. Look at that. I mean, so
Was that on earnings or was that out of the blue?
honestly, I don't even know. I don't know if it was.
It was looking great.
Yeah, I know it was looking great. It kind of looked like this sort of turnaround situation. They might have. Yeah, I don't really know what I don't really know what happened, but so you can see I got sold out here, which was actually pretty high compared to where it went. Yeah. But I still, I gave away the gain that I had. But it's just like you kind of have to do that to protect yourself. Any questions on this one?
No, I was just this is LegalZoom, right? So maybe there was some ChatGPT news out of the blue, something like that. Yeah.
And you can see, I mean, after a move like that, there's no point in staying in. Look at this thing. It's just, after these things have these moves like that, they just go nowhere. Even Weight Watchers, after that drop, it goes up a little bit again, but then it just doesn't really go anywhere. So when you see a move that big to the downside, you just sort of need to leave it alone.
Step aside. Yeah.
Yeah, step aside.
And
find something else.
Yeah, Sean, on your buy side, are you typically executing, at the open, at the close, or just kind of when it pushes through the pivot point that you're watching?
It's usually just through the pivot point. Now it's really important where it ends the day. I think if it closes, or sorry, if I get bought in, goes through the pivot point and then sort of squats and finishes the day low, like let's say I'm down on the position by the end of the day, I actually take it out of my account. So I sell it on the close if I'm at a losing position. And the reason I do that is I think it's just there's a psychological value to it. I never want to sleep knowing that I am sitting with something that's losing me money. I don't know if it's Livermore or someone, Jarvis, but they said like the majority of money they made was when they were right from the very start of a position. And I totally agree with that. If you buy a breakout and it reverses right when you broke out, that actually that's called a fake out. And I mean, if I can sort of draw this, you got like a cup and handle, you got the neck right here, you buy on the breakout, and that's all great. But if it reverses on a breakout, you like more often than not, it's actually changing direction and it's going to have a weak recovery and then start a downtrend. I think something, I don't know if this is like, yeah, I guess I'll share this. There are only really four, I think, safe times to buy a stock, and that's at a just sort of like a breakout buy right here, and then you can buy when something does a sort of a breakdown and reversal. That's a shakeout, right? So you can buy at the neck.
Yep.
I mean, this right here is so common, and I actually I'm starting to see these more than, I mean, maybe not breakouts, but you see this everywhere. And then the inverse, you've got the breakout reversal. That's what you call like a fake out. This is where you could short this, and then a breakdown is another short where it just keeps going lower. And so I almost exclusively trade these setups, and I think it keeps me out of trouble because there's a very specific buy point and a very specific sell point, right? You buy at the neck. Here, I'll do this. You buy coming out of the neck, and you hold it. Even here, you buy at the neck, you buy here, but then you would sell your position here if it crossed down below it, right? And the same sort of here, if you're looking for a breakdown, oh my gosh, let's see, you would short at the neck, right? And you would hold it. But if it recovers, you short right here, but if it recovers, you get out, you cover your short. And so I think if people sort of stick to those fundamental plays, it would save them a lot of hurt. Let's see. Do you want to see more examples or?
Yeah, let's do it. I've got some more questions, but yeah, let's go through some more.
Actually, let me hear
more examples.
Let me hear some questions. I'll pull these up as well.
Yeah. Well, first, taking a step back, I think people are always really interested in hearing about people's routines. So, you've covered these trades, but I think it'd be nice to hear kind of the rationale and process to find these type of setups where you've got a longer term decline, you've got kind of the sideways neglect period, power move up, and then setting up a base. Do you run screens? Do you just go through a lot of names? What's kind of your process for finding opportunities like PLTR, Weight Watchers, or Legal Zoom?
So what I do, which I don't really recommend people doing, but it's really helped me, is that I don't necessarily run a specific screen, but I go through every single name in the New York Stock Exchange and the NASDAQ. And I used to do it about twice a week, but now I do it about once a week. But I just go from like by market cap, and I just go through every single chart, and I'm spending like half a second on each chart until something, stands out to me. And so I'm not running any screens on MarketSmith. I'm not, I'm just sort of, I want to see everything in the market because you start to see themes popping up. You start to see that, all of the gold miners have started doing well, or all of the, AI stocks are doing well. And you sort of start to see these things naturally produce. And these moves from the bottom, with the volume and the price color, they do stand out. So if I'm just sort of going, through the market and I'm hitting, 100 different charts in, every 10 minutes or something like that, you start to find names that sort of match the look that you're going for. And I mean, I do that because I just don't want to miss anything. I don't want to set a screen that's gonna, take out, these 500 stocks that I might want to look at. And so, yeah, I basically look at every chart in the market.
Yeah, and you've pointed out a few things that I think are worth reemphasizing about, I think how you judge the quality of a setup. You're looking for, those undercuts of the neglect period. You're looking for big volume ups, gap ups to a key kind of level that coincides. Is there anything else that you really look for in the price and volume action that, makes the setup like an A+ standout? I want to trade this when it breaks out type move.
Let's see. I mean, volume is super important. But it sort of validates that it's a real move. I think something that is also important is you want to see notable price accumulation. In this example, can you still see my screen?
Yeah.
So I mean, like you want to see a stock that has the ability to go from $2.50 to $6. That's a double. It went 100% in that time period, and the reason you want to see incredible price performance in the immediate term is that it sort of it dictates what it could possibly do in the next few weeks as well. If it doesn't, let's say the stock is up 20%, the next move up, it's probably only going to be another 20% or maybe a 10%, maybe it's like half of that. But when I see a stock it can move from $2 to $5 and then rests at that new price range, that's telling me that the next move, it might not be a 100% move, but you're probably going to have like a 50% move or something like that. And so that's I think that's something that if people want to make big returns, they need to hop on stocks that are making big returns. And so the downtrend, that's fine. You don't actually need a downtrend. I'm looking for a sideways action and something that just shoots up from that sideways trading range, because I want to see that, you know, someone is gaining interest in the market, that someone is out there and they found the stock and they're buying it every single day of the week, and you know, even when it trades down, you know, there's an institution that's going to keep it, you know, from falling, and they're just pumping this thing up. You can see in this example, I don't even know how many days this was up in a row. I mean, this must have been up like, you know, 30 days out of 35 days or something like that. You know, that's not some retail trader that gained interest in the stock. That's an institution, and I'm really just trying to find the stocks that institutions are buying up, and I'm just sort of trying to ride that sort of the next wave essentially. So
yeah, that's great.
Big volume, big price accumulation. It's got to hold that new price. It's got to tighten up. You know, build like a nice little handle. And yeah, but I mean, besides that, you know, I don't really look for earnings or fundamentals. This is enough to tell me, hey, you know, someone has gotten interest in this company, and I'm just gonna, you know, participate in the move. So.
Yeah, you mentioned the theme though. Do you like to trade stocks that you're seeing the whole theme shape up, or it's really just on a stock by stock basis?
It's a stock by stock basis, but it certainly doesn't hurt if you see, you know, a group move. If an industry starts to do well, then that's almost giving confirmation that the move is real. Just
taking a step back, last year you've mentioned a few of them, but what were the kind of overall themes that you noticed, and you know groups of stocks that made big moves?
I mean, the theme this year, you can't deny it, was AI. It was Bitcoin started to move up, so some of the Bitcoin miners had pretty big moves, and then you had the Magnificent Seven. So you know, you had Apple and Microsoft, Nvidia, Tesla. You know, those had pretty, or you know, Facebook and Amazon. Those had pretty big moves. But I didn't trade any of those, which is interesting. I think that's, you know, that's a key takeaway, is that like you don't necessarily need to get the it stock in order to have good performance in a year. You know, there's so many people screaming for Nvidia and you know, Tesla or, you know, Bitcoin, but you can make money without, you know, without being part of those moves is kind of what I found. And I think that's a good reason to sort of like, you know, set FOMO aside. Like, there are always opportunities. You don't need to get the stock that everyone's talking about.
Yeah, for sure. And did you want to actually run through the LFMD trade? I think that looked like
that was, yeah. So let's see. I was in this one. I didn't run this whole way. I actually got sold out here, but you know, very similar play, sort of breaking the neck here. I bought it. So it on the 28th, it opened, you know, around 474. I bought this thing around $5 with a stop around like a 4% stop. So this was like a 20% position, and really quick, you know, there's that reversal wick. You know, I had 4 or 5 or 6 days of good trading, and I just decided to take it with the 22% gain in 6 days. You can't ask for better than that. So
it's not too bad.
Yeah, I mean, obviously, you know, it kept going higher, but it does seem like with these plays, the punchiest part is the first few weeks, and then it just sort of like, you know, meanders. And I've definitely found more value in capitalizing on the time element of trading. And yeah, I can't remember who said it, but it's like money you can always win back, but time is gone. You know, time you can never get back. And so when you're trading in these competitions for 12 months, you need to make most of every single month. And you know, these first little jumps up, that's sort of how you do it, I think.
Yeah, and over the past few years, as your account has grown, do you trade any differently, or you're kind of still just doing the same thing? You've kind of figured out what works for you and just kind of focused on that?
Yeah, I still have the same risk principle, so 1% is kind of how I'm doing it. But yeah, the account has grown substantially, and I don't think I should do anything different. Is how I would answer that. But there is a different psychology, you know, managing a few $100,000 versus you know, $20,000. So